Marginal costing. Marginal costing. Prepare a statement showing profit and loss for the production levels given below. If you produce 200 units, 400 units, 600 units, or 800 or 1000 units, what could be your profits and losses? You have to prepare a statement here. Is that okay? Now, sales minus variable cost, usually named as contribution here. Usually named as contribution here. Clear? Is that available in your text? Not available. Okay. May not be available. No need to worry about that. So we usually start with the question number 1 in Singar Academy text. This is only example. Okay. Sales minus variable cost is the contribution. Sales minus variable cost. Okay. This variable cost is otherwise named as marginal cost. Marginal cost. And from the contribution, if I subtract the fixed cost, I'll get the profit or loss. Profit or loss. Now, we have been given sales and variable cost per unit basis and fixed cost in total basis. Number of units sold being 800. Anyhow, we have to find out the profit and loss for various levels: 200, 400, 600, 800, and 1000 in these areas. Right. Now, sales being 100, variable cost being 60, contribution being 40. Contribution being 40. Clear? 100, 60, and 40. You don't show the fixed cost as well as profit and loss per unit basis. You just keep this one as it is to the extent of 3. Right. Now, what happens if I sell 200 units? Per unit, we get 100. For 200 units, 20,000 rupees is the sales, and variable cost being 12,000, contribution being 8,000. And by incurring fixed cost in total 20,000 rupees ends with loss. Loss I can represent in brackets, 12,000 rupees loss. Clear? Instead of 12,000, if I sell 400 units, what could be the scenario? 400 units. The overall sales revenue being 40,000. Variable cost being 24,000. Contribution being 16,000. Fixed cost 20 is going to be subtracted. It will not be changing with respect to the units produced, right? The ultimate result in this case being 4,000 negative. 4,000 negative. In case of 600 units, what about the result? 600 into 100, 60,000. Variable cost 36,000. Per unit 60 for 600 units. 60 into 600, 36,000. Contribution being 24,000. From that, you have to subtract the fixed cost 20. So the ultimate value being 4,000. You get the profit here. From 600 units onwards, you start facing the profit. What happens if you sell 800 units? 80,000 and variable cost being 48,000. Your contribution being 32,000. Fixed cost 20. 12,000 is your profit. What happens in case 1000 units? 1000 into 100, 1 lakh will be the sales. 60,000 and then 40,000 and fixed cost 20 is subtracted to get the profit or loss, which is 20,000. Hope now you will be able to understand this one. Clear? Now, what is called marginal cost? Marginal cost is nothing but variable cost. The incremental cost you spend for every incremental units is called marginal cost. For producing one extra unit, what's the extra spending you are going to do? Only that 60. This 20,000 remains as it is whether you manufacture or not. Whether you manufacture 0 unit or 100 units or 1000 units, the fixed cost 20,000 remains unaffected. Is that clear? Because of increasing one unit, you need to incur only the 60. That's called marginal cost or variable cost. Is that okay? Now, from the sales, if I subtract the variable cost, okay, what will you get? 40 rupees. 40 rupees is nothing but contribution. Contribution is nothing but the dictionary term. What I contribute to the nation. Huh? That's how the question is today. Huh? Don't ask what the country contributes you, and you need to ask yourself what you contribute to the nation. Huh? Contribute is nothing but you are giving something. Buying and selling gives you 40 rupees gain. What the contribution I am getting because of buying and selling? I am doing an activity of buying this commodity and selling the commodity. Because of that, what I am getting? This activity gives you 40 rupees. That is called contribution. Is that contribution 40 rupees comes to my pocket or not? So that's the question. If I am being the street side seller, okay. So in street side I am selling the goods. Okay. What happens? I am getting purchasing a pen for rupees 60 and in roadside I sell it for 100. 40 rupees will be my profit. 40 rupees will be my profit. Is that okay? The contribution is my profit. But in case of rainy days, I cannot sell. In case of hot summer, then I cannot tolerate the hot. I cannot go for sales. What can I do then? I can rent a small premises. So where I am comfortable. If I am comfortably sitting in a shop and doing the same operation, buying the pen and selling for 100, buying the pen for 60 and selling for 100, that gives me 40 rupees contribution. But that 40 rupees is not in my pocket because I need to have some facilities. For that facility, I spend around 20,000 rupees. Probably rent. Probably rent. Is that clear? 20,000 being my rent. So the contribution what I get to know is first used for what? First used for my facility, means fixed cost. After meeting that only, anything surplus I have could be in my pocket. Come on, tell me. How many minimum number of pens to be purchased and sold to at least meet this commitment? Come on, tell me. How many minimum number of pens you have to buy and sell to meet that facility's cost? 500. Okay. So for every pen you will be getting 40 rupees contribution. For meeting 20,000 of your commitment, how many pens you have to buy and sell? 500 pens. If you are buying 500 pens, selling 500 pens, you end with a small contribution that is sufficient enough for what? Your fixed cost. See, in case of 500 units, 100 rupees is the sale price. For 500, the value being 50,000 rupees. Variable cost per unit being 60 for 500 units. What is the variable cost? 30,000 rupees. If I subtract the variable cost 30,000 from this, my contribution is 20,000. From that, I had to pay what? Facilities cost, like fixed cost 20,000 rupees. So the ended money in my pocket is 0. I don't get anything. So from this, it is very clear. Do I want to go for getting a shop rental or not? If you want to go for renting a shop, you have to be careful whether the contribution is sufficient enough to meet the fixed cost. at least 500 units should be saleable. If your estimated number of units saleable is only 100, so you have to sell only in the roadside. So 100 into 40 rupees per sale gives you contribution of 40. For 100 units, 100 into 40, you will be getting only 4,000 rupees. For the 4,000 rupees, you cannot go for getting a rental premises. You can be a street seller. If you estimate minimum 500, you are pretty happy. Minimum 500, pretty happy, but you don't have anything in your pocket. To get anything in your pocket, you need to sell minimum 500 plus. You have to sell any units more than 500. So in this illustration, it is given like 800 units sold. So 800 units sold, right? So what about the overall sales revenue? 100 rupees per unit for 800, 80,000 rupees is the sales revenue. And variable cost being 60 into 800, 48,000. And your contribution being 32,000. So out of the 32,000 of contribution, your commitment of paying the fixed cost 20,000 is settled. Balance left with you is 12,000 rupees in your pocket. This is your profit. This is your profit. Hope you will be now able to understand this. So now from this it is very clear, whatever the contribution you get, first of all you have to meet the fixed cost expenses. Leftover amount will be your result. Leftover will be your result. Is that okay? Now while planning, can I go for improving the facilities or not? Okay, you have to decide whether you are able to sell minimum number of units to come settle the facilities cost at least. Okay, at least you have to sell 500 units to meet the facility cost. It means you have to project whether you are able to, or you have to guess whether you are able to sell minimum 500 pens or not. If you are not able to sell 500 units, definitely you cannot establish the shop. You cannot establish the shop. So this chapter, especially marginal costing, is one of the fantastic chapters. At CMA Group 1 level, only the preliminary illustrations are available at Inter Group 1 level. And in case of CA Inter Group 2, you have some extra concepts also to be learned. Especially CMA Group 2, CMA Group 2, where you have applications to decide whether we can start the business or not. Can I wind up the business or not? Can I either fix the price differently to some special customers? The price may be 100. Can I fix the price differently to some other special customers like 80 rupees, 70 rupees? So for those decisions, we can now depend on the marginal costing technique. This is one of the technique. Okay, marginal costing is a technique. Standard costing is a technique. Marginal costing also a technique. Even budgeting is also a technique. In costing, you will study methods of costing and technique of costing. Okay, so methods of costing and technique of costing. So these three are called the techniques of costing. Technique is nothing but any small methods you have or techniques you have for helping for your decision making. Helping for your decision making. So what about your decision making? Can I start and run the business or not? Can I rent the premises or not? Can I continue or discontinue the business or not? Can I fix the sale price differently or not? So for all those things, we need to get some techniques to decide. The best technique here available is the marginal costing. Is that okay? See. So I think up to question number 14, 15, it's a comprehensive list. Up to 15th question is the common for all. And this problem type, decision making and profit planning, is especially for the CMA Group 2. A part will be available for the CMA Group 1 also, right? So sales mix, elimination of product. If I have 3 or 4 products sold in my market, can I reduce the number of products sold in the market from 3 to 2? Can I add one extra product? If there is any foreign order comes with the different pricing, can I accept this or reject this? Do I able to am I able to manufacture myself, or do I want to buy it from outside? Make or buy, planned merger, expansion. So these are the places where we can use the marginal costing technique. Marginal costing technique. Is that okay? Now, so 500 units you have to sell minimum, right? To meet at least your contribution is equal to what? Your fixed cost. This one is called break even point. So always you need to have the main criteria for deciding whether you can invest in any projects or not, which is nothing but there should be BEP attainability. Are you able to attain the BEP? BEP means your contribution should be equal to your fixed cost are no profit, no loss zone. But if you estimate that you can sell around 800 units, 800 units, which is more than 500 by how many units? 300 units. So if you are able to sell beyond that minimum BEP, then that excess sale, is called safest position. That's why it is called margin of safety. Margin of safety. Hope you will be now able to understand. So BEP, margin of safety, contribution. These are the three predominant terms you have to understand. Number one, number two, number three. Apart from that, the relationship between sales and contribution, is called profit volume ratio. This is called profit volume ratio. The formula for this being C bar S into 100. Contribution by sales into 100. Contribution by sales and 100. Here, the contribution is 40 and your sales being 100. So, if I represent that in terms of percentage, this is called PVR, contribution. Is that okay? So, how many things you have to learn here? Contribution. Contribution is nothing but sales minus variable cost. Buying and selling gives you some contribution. Okay, that is nothing but sales minus variable cost. And then you have to understand BEP. BEP is nothing but where your profit and loss is equal to 0. You don't have any profit loss. Otherwise, your fixed cost is equal to contribution. Okay, fixed cost is equal to contribution. The next one is, are you safer with your business or not? Will be decided based on the number of units you sell. More than the BEP will be the safest one. If it is higher, then it will be safer. So, total sales minus BEP sales. So, total sales in this case being 50,000 rupees and total sales 80,000 rupees, but the BEP being 50,000, the difference between these two, 30,000 rupees is called margin of safety in terms of rupees. If you represent 300 units, then it is called margin of safety in units. So, you can represent either in terms of amount or in terms of rupees also. And final term you have to understand here is PVR, profit volume relationship, C bar S in 100. So, these are the four terms you have to understand. Before we go for solving the illustrations, so I will make you understand all the illustrations without formula first. Thereafter, I will teach you how the formula is derived and how the formula can be used for solution. So, from the question number 1 onwards, almost all these questions, up to 9 questions, 9 subdivision 10. Almost 18 to 20 questions we have. All these questions are going to be solved without using even single formula. And 10th question. This 10th question, I started using the formula. Using the formula, I am going to solve. So, formula list also there. Okay. I will guide you how the formula is also be arrived. Without formula, I will solve, and then after I will explain you along with the formula also. Right. Before we go further, let me finish off the basic theory here. Basic theory about the BEP, margin of safety and all. Is that okay? So, what you have to do? Second point. Prepare BEP chart, break-even chart, contribution break-even chart, PV chart. Also explain sequential profit volume graph in case a company manufactures more than one product with varying profitability. So, these are the questions are going to be covered here. Let's now first finish off these three. Okay. BEP chart, contribution, BEP chart and PV chart. Okay. Let me first explain this one, BEP chart. BEP chart. Yes, the points what we have here, okay, is going to be plotted. Rupees as well as quantity. Rupees ranges from 20 to 1 lakh. So, I write this way: 20,000, 40,000, 60,000, 80,000, 100,000. And number of units being this one: 200, 400, 600, 800. So, 200 units, 400 units, 600 units, 800 units, 1000 units. Now I am going to plot the values. What are the values are going to be plotted? I plot, first of all, fixed cost. Second one is total cost, fixed cost, total cost, total revenue. These are the three items are going to be plotted here. Clear? Yes, come on. What about the fixed cost here? Fixed cost in all the scenario being 20. In case if you manufacture 200, then the cost being 20,000, even 1000, the cost is 20. Okay, hope now you'll be able to understand this. Is that okay? This is nothing but fixed cost. Clear? Yeah. Then total cost. I am going to plot the total cost here. Total cost being the summation of these two, variable cost and fixed cost. 12 plus 10, how much? 32,000 at 200 units. Here, roughly, roughly here. And for 1000 units, 60,000 plus 20,000, 80,000 rupees. Maybe roughly here. If I connect these two, what about this one? This is total cost. This component is called variable cost. Clear? Similarly, revenue, sales. At 200 units, the sales is 20,000. At 1000 units, the sales being 100,000. Zero units, the sales being 0 only, right? So here, I am going to connect all these dots. This will be the total revenue. Clear? The point where total revenue intersects the total cost, this point is called BEP. This point is called BEP. If you draw the straight line vertically down and horizontally connecting to the y-axis, is that clear? You will get what? You will get 500 units roughly. That's what about BEP in units. This one is called BEP in units. Connecting here may be 50,000 rupees. 500 units at the rate of 100, 50,000 will be this value. This is BEP in rupees. BEP in rupees. Is that clear? Sometimes rarely you may be asked to draw the chart, or theory question may come. By the time you can simply draw this diagram. Of course, you no need to draw these statements. You can imagine yourself and you can draw directly. You can score good mark. Apart from that, so here in your examination, like you can write this way: fixed cost, total cost, where the total cost starts from this point. This point is equal to the fixed cost. Whether you produce or not, zero production, still you have to pay the fixed cost. That's why the fixed cost remains 20,000 at this level. even 0th point. Okay, but if you don't do any sales, definitely your revenue is 0. So the revenue curve starts with 0, but it grows gradually and merges with the total cost at BEP. Thereafter, the total revenue will be higher than total cost. Is that okay? That's how you can draw. In your examination, you can draw this way. Okay, this is total revenue, and draw this way. This is what about the BEP. Remember this point you know where your total revenue curve is more than total cost curve. Otherwise, this will be called profit zone. This will be called profit zone. Is that okay? Profit zone. In this point, you can call this being loss zone, because this is your total cost, this is your total revenue. The difference between these two is your loss here. So anything below the BEP point will be your loss zone. This is called loss zone. Is that okay? Loss zone, profit zone and loss zone. Okay, and this angle you have no, the angle, this is called angle of incident. Angle of incident. Angle of incident. Is that clear? Hope now you'll be able to understand the angle of incident here. And listen. The point before, after this. Is that okay? This is nothing but what? BEP, break even point. Clear? So you have to understand the BEP chart here. What I have solved here is nothing but BEP chart. Okay, BEP chart. Very rarely the theory also asked in the examination. So that's why I have just solved this here. Okay. Now what happens in case of contribution chart, sir? Contribution chart. Okay. Now I'm going to draw the contribution chart here the same way. Let's see. Contribution chart. Okay, this will be rupees, this will be quantity being 200, 400, 600. Okay, 200, 400, 600, 800, 1000. Rupees being 20,000, 40,000, 60,000, 80,000, 100,000. Clear? X-axis and Y-axis we have posted here. Now what are the points are going to be marked here? You have to mark variable cost, total cost and total revenue. This is called contribution BEP. This is called contribution break even chart. Is that clear? First, what we have done is nothing but BEP chart or simply BE chart. And here, this is called contribution chart. In contribution chart, first you have to draw the variable cost only. So here, the variable cost starts with what? 12,000 rupees at 200 units. Definitely, if you don't have any production, the variable cost is 0. If you produce 1,000 units, the total variable cost being 60,000 rupees, probably here. Now I am connecting these dots, and this will be called as variable cost. After that, what we have to do? I have to add fixed cost with that to get the total cost. Okay, this will be variable cost. In this case, this will be fixed cost. So What about the total cost? Total cost in the very first instant being 12 plus 20, 32,000 rupees. At 0, the value being 20,000. At 200, it may be 32,000. In case 1000 units, the value being 60 plus 20, 80,000 rupees. 80,000 rupees. Is that clear? Now, if I connect these dots, okay. What about this one? This one is called total cost. This one particularly fixed cost. You know that the fixed cost component will be same. Fixed cost component will be same. Is that clear? So the gap between this line and this line remains constant for all the level, but here it's not so because it's a variable cost. As the number of units are manufactured more, the variable cost will be higher. If it is lesser, then automatically this will be lesser and 0 where the production is 0. Okay. In this case, we start with fixed cost. At 0th period also we have to spend 20, but variable cost 0. 0 plus 20 is the total cost, right? And in case of sales, I can now plot the sales also. In case of sales, for 0 it's 0 only. For 1000 units, the value being 1 lakh. The value being 1 lakh. This will be total revenue. Here in this dot you can draw the line. So rest will be the same. Rest will be the same. This is BEP point, angle of incident, and this will be profit zone and loss zone. Everything is similar. Only one change is there in case of contribution break-even point. In case of contribution break-even point, okay, the main thing to be noted here is first you start with the variable cost, then you add the fixed cost. In case of BEP ratio, BEP chart, you start with the fixed cost, thereafter you find out the total cost. Now, under contribution break-even point, you can get the contribution directly. What is the contribution? Total revenue minus variable cost, total cost, total variable cost. Okay, sales minus variable cost is the contribution. So here, sales is this one, variable cost is this one. You can find out the difference here. The difference between total revenue and variable cost is nothing but contribution. The contribution is increasing. Earlier contribution is 0, thereafter increasing as sales grows. Okay, at 1000 units, the overall contribution being this much. This is contribution. In that contribution, you spend money for the fixed cost, balance is your profit. Balance is your profit. You understand? So in contribution break-even point, no, you can easily calculate the contributions and its growth rate. Okay, this will be called contribution. Total revenue minus this one. This is contribution. In that contribution, this is fixed cost, this is profit. So the fixed cost component is same, but here we don't have the profit, we have the loss. Clear? Hope now you'll be able to understand the logic here. And also you can understand why it is named as contribution break-even chart. Clear? Now, we will now move on to the PV chart. Profit volume ratio chart. Profit volume ratio chart. So you just post the profit only. You just post the profit only. That's called PV chart. Okay. So what happens here? Let's see. You're going to show only the profits. Okay. In case of profit, negative 12,000, positive 20,000. Okay. We'll start with this number. 4, probably 10, 20 negative. Here 10, 20 positive. In case of PV chart, I am going to post only the profit and loss. Quantity 200, 400, 600, 800 and 1000. 1000. Is that clear? We got the values. Now what happens in case of 200 units? You face loss. Okay, in case of 400 units, you face 4000 loss. In case of 600, 4000 gain. In case of 1000, your gain being 20,000. I am going to connect these dots here. Okay. Now what happens here? This will be the break-even point. This will be the break-even point. Okay. So this zone is the profit, this zone is the loss. If you are marking only the profit, then you'll get the PV chart here. So we have been given three charts, three variants of the chart. One is a BEP chart directly, another one is a contribution break-even chart, another one is PV chart. Hope now you'll be able to understand this one. So this component is for only understanding the logics. Very rarely asked, that 2, 3 or 4 marks theory question you can expect from these charts. So mastering these charts understanding will help you to score good mark also. Maybe 3 or 4 marks may be useful for your aggregate, right? Clear? Now, sometimes you have sequential profit volume graph, PV graph. We may have not one product, 3 products manufactured. If 3 products manufactured, some products PV may be totally different, means contribution may be totally different. Probably sales 100, variable cost 60, contribution 40. This is product A. We have 3 products B and C also. The B's price is 200, the profit variable cost in this case being 160, profit being 40. In case of C, the price being 150 and variable cost is 50, contribution is 100. The PVR of these 3 is totally different, and the profit due to A and B and C are calculated separately, and you plot that in the PV graph similar to this one, and the graph may be slightly bent like, okay, this will appear this way, okay, maybe appearing this way, okay. This may be highest PV ratio item, this may be moderate, this may be lowest, this may be moderate. Okay, that's how we may have the chances of different PV ratios with the different 3 products manufactured by the same company. Okay, this is what about sequential profit volume ratio. So we have one illustration where we have 3 products put together manufactured by the same company. So I'll explain that later on, not here. You just understand that there will be diagram this way. Clear? Hope now you'll be able to understand all these logics. If you have any doubt, you can ask me. Else now we'll start with the illustrations. If you have any doubt, you can ask me. Make a note of it. Now, see, to calculate BP, margin of safety and all, okay, what are the things are in need? Let's see. We need to have a table here, format here, sales minus variable cost, contribution. From there, fixed cost is subtracted to get the profit and loss. One column is for per unit, or if per unit information is not given, then you can use a percentage. Sales will be considered as 100. Out of that sales, what could be the percentage for variable cost? That's how you can represent if the per unit information is not given. Total information for that one column, and for the BEP you need to have one column, and MOS, margin of safety, you need to have one column. Margin of safety is nothing but the sales beyond BEP will be called as margin of safety, or the total is equivalent to BEP plus margin of safety. And in this table, the main thing you have to understand, just like a Sudoku gameplay. Huh? How many of you played that Sudoku? You played. A few of you played. Good. So as the Sudoku, there is a rule. you have to fill in the cells the numbers between 1 to 9 and like similarly here it's a Sudoku game, like a table is there. In the table for the BP, profit and loss will be 0. In case of margin of safety, fixed cost is 0. Am I right? Why? At the BEP level, we don't have the profit or loss. Otherwise, contribution is equal to fixed cost. After the BEP, any sales you do know, you'll get the contributions for the increased sales. In that contribution, you don't have fixed cost because fixed cost was already absorbed up to the BEP level. So it's a sale beyond BEP level. Whatever the contribution you will get is for your pocket. So the BEP and margin of safety, if you add, you will get the total one. So now the relationship among the three numbers remains same at all level, per unit basis or total level or BEP level or margin of safety. The relationship among these three numbers, sales, variable cost and contribution, remains same. If the sales being 100, variable cost is 60, contribution is 40. Instead of that, if it is 1 lakh and variable cost should be 60 and contribution should be 40, the ratio remains same. Is that clear? Hope you will be now able to understand. Now try to feed all the information in the table and rest of the cells you can fill as a missing data to get the entire table filled, right? Let's start with, okay. Now, sales price being 100, variable cost being 60, fixed cost cannot be shown in the per unit column, so contribution is 40. Usually fixed cost will be shown in total column. Okay. Now remember, BEP plus MOS is equal to total, right? As the MOS has 0 fixed cost, the entire 20 is for what? BEP. Then entire fixed cost is for the BEP, then what could be the contribution here? 20,000 rupees. Isn't it? So as I already told you, the fixed cost and contribution will be equal at BEP level. Fixed cost and contribution will be equal at the BEP level. Is that okay? And number of units totally sold being 800. Now try to complete the entire table. Okay. 100 into 800 units, 80,000 rupees is the sales. Variable cost being 60 into 800, 48,000. And 40 into 800, 32,000. From the 32,000, 20,000 is subtracted. You will get the profit being 12,000. Am I right? In case of BEP, how can we calculate, sir? Profit and loss being 0, fixed cost 20. In a reverse calculation, fixed cost should be equal to the contribution. We got this. And I told you, the relationship among the three number remains constant at all the levels. It means, if the sales being 5 share, okay, variable cost should be 3 share and it should be 2 share. I can convert that into the ratios. 100, 60, 40. Not required, but by converting that into the ratio, the calculation becomes simpler, right? Very simple. 100, 60 and 40. Otherwise, 5 is to 3 is to 2. It means, if the contribution is 2, 1.5 times 3 shares should be for variable cost. Adding these two will be the sales. In this case, contribution is 20,000 rupees. If the contribution is 20,000 rupees, what about the variable cost? You can do the cross multiplication. 20,000 into 3 by 2, the value being 30,000 rupees, and BEP should be 20 plus 30 should be the sales, right? From the sales, variable cost is subtracted to get the contribution. Now you got the contribution and say variable cost. In reverse calculation, you can get the sales also. Right? In case of margin of safety, as I already told you, BEP plus margin of safety should be total. Here, profit being 12,000 rupees, where the profit for the BEP is 0, then this 12,000 being the 12,000 due to the margin of safety. So at the BEP, okay, your fixed cost is equal to contribution. At the margin of safety, your profit is equal to the contribution. Because we don't have the fixed cost, so whatever the profit you have, that will be equal to contribution. If the contribution is 12,000 rupees, what could be the variable cost? The ratio remains same, right? If 40 is equal to 12,000 rupees or 2 is equal to 12,000 means, what about the 3 share? Okay, you can do the cross multiplication here also. Clear? Yeah. It is 12 means do the cross multiplication 12 into 3 by 2. Okay. So this is 18,000. From the sales, variable cost is subtracted to get this 12,000 rupees. Do the reverse calculation to get the sales. The sales should be 30,000 rupees. Is that clear? So we got the BEP, margin of safety, in terms of rupees as well as profit and loss for the current scenario. Apart from that, you need to find out the BP in terms of units. In terms of units, how can I calculate the BP in terms of units, sir? Per unit sale price being 100, the overall sales for BP being 50,000 rupees. If I divide the entire BP sales by 100 rupees, 500 rupees is the BP. Similarly, in case of margin of safety, 30,000 rupees is the margin of safety. Otherwise, 30,000 divided by 100, 300 units will be the margin of safety in units. Is that clear? So, we calculated BEP, margin of safety, that too BEP in rupees, in units, okay, and profit and loss for the given scenario. Apart from that, another one will also be calculated, which is called PVR. Profit volume ratio is nothing but what? The relationship between contribution by sales. So, the relationship between the sales and contribution will be the PVR. So, 40 rupees can be earnable for every 100 rupees, means 40 by 100 will be the PVR. So, 40 by 100. Is that okay? So, 40% will be the PVR. Hope now you will be able to understand the PVR calculations. One more thing is BEP as well as margin of safety sometimes may be given in percentage also. What is that in percentage, sir? Percentage means the total sales is 100, assumed to be 100. Total sales is assumed to be 100%. Means 800 units is considered as 100, means what about the 500 units? Do the cross multiplication, 500 into 100 divided by 800. What's the value you are getting? So, if you ask what about the BEP in your company, the financial advisor may give the answer like 62.5% of the sales may be the BEP. Means 62.5% of the total revenue is the BEP. So, balance 37.5 will be your MOS. Balance will be your MOS. Is that clear? Hope now you will be able to understand the entire logic. Hope, any doubts here? Now, let's try to solve this illustration. Come on, solve in your own text. So, what do you have to do? Sales is given, variable cost is given, fixed cost and net profit is given. So, what do you have to do? You have to calculate PVR, BEP and MOS. So, what are the basic assumptions you have to do? What are the basic assumptions you have to do? Yeah, what is the basic assumption? In BEP, we don't have profit. In case of MOS, we don't have the fixed cost. So, you now fill all the cells. In per unit or percentage column, you have to stop with the contributions extent. Don't calculate the fixed cost per unit as well as profit and loss per unit. Now, sales being 2 lakhs. Variable cost being 1 lakh 20. Fixed cost 50. Oh, contribution, fixed cost 50 and profit 30. From the sales, if I subtract the variable cost, the contribution being 80. So, these are the available information. So, I am going to, these are the available information. This is a pre-assumed information. Now, based on this information, I now fill all other details also. So, from sales minus variable cost, you can get the contribution, or fixed cost plus profit plus fixed cost will be the contribution. That's how you can calculate in both the way. Either from 2 lakhs, 1 lakh 20 subtracted to get the contribution, or 30 plus 50, 80,000 contribution. That's how you can calculate. Right. So, here the value being 80,000 rupees. Now, if you add up these two, then you will get total, right? Then this total profit 30 becomes the profit due to what? Margin of safety. And total fixed cost 50 could be absorbed in BEP itself, so it should be posted here. Now, by adding these two, you will get the contribution. Am I right? So, 50 plus 0, 50. Otherwise, the fixed cost becomes the contribution at the BEP level. Profit will be contribution at the MOS level. Is that clear? Now, how can you calculate the rest of the 2 points? The relationship among the three remains constant. The relationship among the three remains constant. Is that okay? The relationship can be identified this way. Sales is assumed to be 100. Sales is assumed to be 100. If 2 lakhs is assumed to be 100, what could be the percentage for variable cost? You can do the cross multiplication. 1,20,000 into 100 by 2 lakhs. You will get how much? 60 percentage. And your contribution being 40 percentage. You got this value. 100, 60 and 40. 100, 60 and 40. It means if the contribution being 2 share, variable cost is 3 share, sales is 5 share. Okay, if the contribution is 2 share, this is 3 share, this is 5 share. Now see here, margin of safety 30,000 will be contribution, which is 2 share. For 3 share, you can do the cross multiplication. It should be how much? 30 into 3 by 2, 30 into 3 by 2, 45,000. From the sales, variable cost is subtracted to get the contribution. By the reverse calculation, from the 30, you have to add the 45,000. So 75,000 will be the sales. Is that okay? From the 2 lakhs, if I subtract 75,000, so 1,75,000 will be the BEP. 1,25,000 will be your BEP. Is that okay? You can calculate this way, or you can calculate the same way how we calculate in case of MOS. In case of MOS, we calculated using the ratios 2, 3, 5. The same ratio can be used here. 50,000 is assumed to be 2 shares. And what about the variable cost? So this is 3 share, this is 2 share. This will be 75,000 and this will be 1,25,000. Is that clear? And PVR being the relationship between contribution by sales and 100. So here contribution being 40 for every 100 rupees, then the formula, the final answer being 40%. Final answer being 40%. Now you can represent the BEP and MOS in terms of percentage also. If you want to represent the relationship between the total BEP and MOS in percentage, the total is assumed to be 100. If the total is 100, which is nothing but 2 lakhs. 2 lakhs is 100 means 1,25,000 should be how much? You can do this way, 1,25,000 into 100 by 2 lakhs. How much is that? So 62.5. As in your total sales, 62.5 is BEP, then balance 37.5 being your MOS. This is MOS. Is that clear? Clear? Text me, we'll move on to the next one. Second question. Come on, try to finish off. Sales being 2 lakhs 40. Profit being 25%. If I multiply these two, the variable cost being 60 per unit. Profit being 25%. 25% on 2 lakhs 40,000 being 60,000. Sales price per unit being 120. Find out the fixed cost. Okay. Now try to finish off all the available information and assumed information. So available information, these are sales per unit, variable cost per unit, and total sales and profit also. And assumed information being at BEP, the profit and loss being 0. In case of MOS, fixed cost being 0. Then automatically what happens? By adding these two, you will get the total, right? Try to fill as you wish, just like a Sudoku game, right? So here the contribution being 60, you cannot represent, you cannot show the fixed cost as well as profit and loss per unit basis, you score out this. If the sales being 120, variable cost is 60. If the sales is 2 lakhs 40, what could be the variable cost? You can do the cross multiplication. By doing the cross multiplication, you'll get what? 1,20,000 rupees. From the sales 2 lakhs 40, 1,20,000 is subtracted. So balance 1,20,000 will be your contribution. As you know, the contribution being 120, profit being 60, the missing data will be the fixed cost. How much it should be? 60. We got this value. Now for the MOS and BEP, the entire profit is due to the MOS and entire fixed cost is due to BEP. Now you can calculate you can find out the contribution. Here the contribution being 60 and here also it is 60. Okay. Now contribution is 60. What about the variable cost? Both are same, right? Very simple. 2 share, 1 share, 1 share. If the contribution being 1 and variable cost is 1. So summation of these two will be the sales 2. So similarly this 60 will be the variable cost and 60 plus 60, 1,20,000 is the BEP. From the total, BEP is subtracted to get the margin of safety. That way also you can calculate, or the reverse way. 60 is 1 share, another 1 share is for the variable cost and total being 1,20,000 rupees. And for the PVR, the relationship between contribution by sales into 100, which is 60 by 120, 50%. Even you can represent the total and BEP and MOS in terms of percentage. If the total 2,40,000 is assumed to be 100, what about the BEP and MOS? If the 2,40,000 being 100% and 1,20,000 should be 50%, and this will also be another 50%. Is that clear? Hope now you'll be able to understand this one. If it is clear, text me, so we will move on to the next one. Or if you are able to solve this ahead of me, then you can solve. Try the next one also. Which one? இது இந்த இடமா இந்த இடமா Question number 3. Sales 500 lakhs. Total sales 500 lakhs. Profit 120 lakhs. Variable cost 60%. If the variable cost 60% means 60% on sales of 100. That's all. Okay, 150. If sales being 60, so variable cost being 60 means variable cost 60, sales is 100. Is that okay? Variable cost percentage is nothing but the proportion of variable cost in your sales, and your contribution is 40. Contribution is 40. You should not show fixed cost and profit and loss per unit basis. In BEP, we don't have the profit. In MOS, we don't have the fixed cost. If you add up these two, you will get the total. It means 0 plus this one should be 150. As this one is 0, this 150 will be this value. Right. Out of sales, 60% is variable cost. Here the sales is 500, then 60% on this being 300. From the 500, 300 is subtracted, you will get the contribution 200. As you know, the contribution 200, profit is 150, balancing figure is the fixed cost. The fixed cost being 50 rupees. The fixed cost, what you get in total is due to the, means will be absorbed in BEP itself, so you put that value here. The summation of these two values will be the contribution. Otherwise, the fixed cost at BEP is equal to the contribution at BEP. Profit will be equivalent to the contribution at MOS. So the 50 becomes the contribution for the BEP. This 150 becomes contribution for MOS. Is that okay? Now, the relationship among the three numbers 100, 60, 40. Otherwise, 5 share, 3 share, 2 share. This is 2 share, this is 3 share, this is 5 share. 2 share is 150 means what about the 3 share? So you can write this way. Okay, 150 is equal to 2 share and 3 share should be how much? You can do the cross multiplication. 150 and 3 divided by this one. So 150 into 3, 450 minus divided by 2, 225 will be your answer. Okay, 225 plus 150, 375 will be the total sales. Sorry, MOS sales. Total sales is 500. MOS sales is 375. From 500, 375 is subtracted to get the BEP being 125. As the sales is 125, contribution is 50. The difference between these two, the balancing figure, variable cost being 75. Is that clear? Clear? Shall I move on to the next illustration? Yeah, come on, try. How many of you completed the fourth one? Yeah. You can try it very easily. Variable cost in the question number 4 being 2 lakhs. Sales being 5 lakhs. I have been given the BEP sales being 3 lakhs. So what are the things are constant here? At BEP we don't have the profit. At MOS we don't have the fixed cost. As you know that you have to add these two to get the total. Try to fill the rest of the cells here. Usually nothing stated, then sales is assumed to be 100. 5 lakhs being 100, then what about the 2 lakhs? If you do the cross multiplication, 100 into 2 lakhs by 5 lakhs, 40%. From the 100, 40 is subtracted, the contribution being 60. You no need to show fixed cost and profit and loss either in per unit or percentage column. So from this it is very clear the relationship among the three being 5 share being the sales and 2 share being the variable cost, 3 share being contribution. As you know that 5 share being the 5 lakhs in total, 2 share is 2 lakhs and contribution should be 3 share. Now I don't know the fixed cost as well as profit and loss. Stop here. Try to solve the other columns also. In case of other columns, MOS can be calculated easily. BEP plus MOS is equal to total. Total is 5 lakhs, 3 lakhs being the BEP and MOS should be 2 lakhs. Now, if the sales being 5, variable cost is 2 and contribution is 3. Otherwise, variable cost is 40%. From the sales, you just calculate 40% for the variable cost. 60% is for contribution. So, 40% on BEP being 1,20,000 rupees. And from the sales of BEP 3 lakhs, 120 is subtracted to get the contribution being 80. You know the profit being 0 at BEP, then definitely the contribution is equal to the fixed cost at BEP level. Okay. Clear? Now this 80 should be here. Isn't it? 180. Okay. Contribution 180. Sorry. Then this 180 should be here, right? 180 plus 0. 180 plus 0 is equal to the total value. Otherwise, the fixed cost at BEP will be the fixed cost at the total. In total, 3 lakhs is the contribution. Fixed cost 180 is subtracted. So, the profit being 1,20,000. So, 0 being the BEP from 120, 0 is subtracted to get the profit for MOS. That profit what we get in total is nothing but the profit for the MOS. That will be the contribution at MOS. Contribution at MOS and sales at MOS is given. So, difference between these two, 80,000 will be the variable cost at the MOS level. You can cross verify that these two summation will be in total column. Is that okay? 3 lakhs plus 2 lakhs, 5 lakhs, 120 plus 80, 2 lakhs, 180 plus 120, 3 lakhs, and 180 plus 0, 180, 0 plus 120, 120. So that's how we can get the answers here. Clear? I request you to try the other illustrations also same way. Anyway, I'll try the next one. You try to solve ahead of me. If you are not able to guess, go home and try again yourself. So with this logic, you can solve any number of illustration in this chapter. Okay. Now let's move on to the next illustration 5. Online students, is it clear? Come on. Shall I move on to the next one? Text me. Now, find the variable cost per unit. Sales being 20,000, sales being 20,000, fixed cost being 4,000, BEP sales being 16,000, selling price per unit being 25 rupees. Is that okay? So, at BEP we don't have the profit, at MOS we don't have the fixed cost. The entire fixed cost will be absorbed at the BEP level itself. So, from this it's very clear, at BEP level 0 plus 4,000 will be the contribution, here 4,000. From 16, contribution 4 is subtracted to get the variable cost being 12,000 rupees. Okay. Total minus BEP is equal to margin of safety. 20 minus 16, 4,000 will be the margin of safety. Margin of safety. Right. Now, the relationship among the three remains constant at all level. Here, all the three relationship can be guessed from BEP, can be arrived from the BEP. In BEP, 16 sales, 12 variable cost, 4 contribution. Otherwise, 4 share, 3 share, 2 share. Am I right? 1 share. Okay. It means if the sales being 4, variable cost should be 3 times and contribution should be 1 time. Come on, tell me, what about the variable cost here? You have to do the cross multiplication. 25 being the sales value is given. What about the variable cost? 25 into 3 by 4. 18.75 and contribution should be 6.25. And the PVR being contribution by sales into 100. The contribution being 6.25 divided by sales is 25. Then ultimate value being 25%. 25%. Try to finish off the rest also. How can I finish the rest? 20,000 sales means the ratio among the three being 4:3:1. 4:3:2. 4 share is 20,000 rupees. Then 3 share should be 15,000 and 1 share should be 5,000. From the 5,000, 4,000 is subtracted. So you'll get the ultimate profit being 1,000. The profit becomes the profit because of a margin of safety, and in margin of safety, the profit becomes the contribution. The difference between sales and contribution margin of safety is the variable cost. Now you can calculate the sales in terms of units. How can you calculate the sales total BEP and MOS sales in terms of units? Overall sales will be divided by sales price per unit, so which is 25 rupees. 20,000 divided by 25, 800 units. 16,000 divided by 25, 640, and 4,000 divided by 25, 160. Even you can represent in percentage also. If you want to represent in percentage, the total sales is assumed to be 100. If 800 is equal to 100% and 640 should be 80% and balance 20% will be MOS. If the company, if you ask the company's BEP, what about the BEP's levels are, then the company will share to you 80%. If the BEP being 30%, 40% or 25%, what does it mean? They have huge margin of safety. Okay. If the BEP is higher, the company is weaker. Always it may go negative also, right? So you have to be double cautious. You can guess the company's performance is based on BEP ratios, BEP percentage, right? Okay, clear? If it is clear, text me so that we'll move on to the next one. I need all of you to answer and text me in online. Come on. Now, find the missing figures. 1000 units for A, sales 2 lakhs. You have to find out the variable cost, fixed cost given, profit dash nil, and BEP is 2 lakhs. Try to fit the details in the table. Number of units sold for A being 1000, overall sales being 2 lakhs, variable cost you have to calculate, and fixed cost being 1 lakh, profit being 0. Profit being 0 means the total sales itself equivalent to BEP. We don't have any marginal safety here. So BEP is also 2 lakhs, right? We guessed already. If profit is 0, the BEP as well as total sales are same. So at BEP you don't have any profit. So this is 1 lakh. You forget about the MOS. We don't have the MOS. Now what is the question? You have to find out the variable cost. How can you find out the variable cost? By solving this column. You can get the details. Profit is 0, fixed cost is 1 lakh. Otherwise the fixed cost becomes a contribution at BEP. As you now know the contribution at BEP, the difference between sales and contribution will be the variable cost 1 lakh. Okay. So out of 2 lakhs, 1 lakh is the variable cost. In total also only 2 lakhs. Then the variable cost for the total also being 1 lakh. The required answer is calculated here. The variable cost in this illustration being 1 lakh. For A. For A. Similarly, now you have to try for B also. Make it faster. Make it faster. Now for B, let's try for B. In B also total number of units sold being 1000. Sales required to be calculated. Variable cost is 60. If the variable cost is 60% means in sales it is 60% and contribution should be the balancing figure 40. If the variable cost 60%, then the PVR is 40%. 60% for the variable cost, balance is the contribution. Okay, then the PVR is equal to 40%. Now, fixed cost also to be calculated. Profit being 50,000 rupees. The profit what you have here will be equal to the profit in MOS also. And BEP in this case being 1,60,000. At BEP level, you don't have the profit. At marginal safety, you don't have the fixed cost. Okay. The profit 50,000 rupees in MOS becomes the contribution. The relationship among the three numbers, sales, variable cost and contribution being 5, 3, 2. If the contribution being 2 share, this should be 3 share. If 2 share is 50,000, 3 share should be 75,000. And total sales at MOS is equal to variable cost plus contribution 1,25,000. As total sales is 1,25,000 for the MOS, overall sales being BEP plus MOS. So 160 plus 125, 2,85,000. Out of 2,85,000, 60% is variable cost and 40% contribution. Come on, calculate 60% and 2,85,000. 1,71,000. If I subtract 1,71,000 from here, 1,14,000 is the contribution and your profit is 50. The difference between these two, 64. Okay, 64,000 will be your fixed cost. You can cross verify by solving the BEP column also. 160 is the BEP sales. Out of that, variable cost should be 60%. 60% on this being how much? 96,000, balance being 64,000. As we don't have any profit for the BEP, that entire contribution is a fixed cost. You can cross verify that these two should be same. Otherwise, by adding these two, you will get the total values. With that, question number 6 is also over. Clear? Make it fast. Shall I move on to the next one? Come on. Seventh one. Fixed expenses 4,000, break even point 10,000. Calculate PV ratio. So BEP being 10,000 rupees, BEP sales, and fixed expenses being 4,000 rupees. At BEP we don't have the profit. Then you can finish up the BEP column. Entire fixed cost becomes contribution at BEP level. The difference between contribution and sales variable cost being 6,000. Assume that sales being 100. 10,000 is 100 means variable cost 6,000 will be 60, contribution being 40. Otherwise PVR being 40%. 40%. Now you have to answer for this one. Profit when sales are 20. If sales being 20, what is the profit? If sales being 20, variable cost portion being 60% on the sales. How much is that? 12,000. And your contribution is 8,000. Of course, you have to pay the 4,000 rupees for fixed cost. Balance 4,000 is your profit. If the sales being 10,000, it is BEP. If the sales increases to 20,000 rupees, you will earn 4,000 rupees profit. Next question. What could be the sales required to earn a profit of 20,000 rupees? As the profit is 20,000 rupees, what is the fixed cost? Fixed cost remains the same. To earn 20,000 rupees, you need to have the contribution 24,000 because you have to meet the fixed cost. Thereafter, whatever the leftover contribution is for your pocket. So 4,000 should also be earned, and your required profit 20,000 should also be earned. So the total contribution required be 24,000. The relationship among the three numbers 5, 3, 2. 2 share is 24,000 and 3 share should be 36,000 and 5 share should be 60,000. Is that clear? 5 share should be 60,000. Clear? Seventh question is also over. Seventh question is also over. Now, shall I move on to the next one? Online students, come and text me. Okay, ninth question I can try in the next class. We'll Yeah, we try to finish up 8th and ninth question we'll try in the next class, because ninth question is a comprehensive one. From the ninth, we have some changes and we'll go ahead around with almost 10 subdivisions. 10 subdivisions. So let me try to finish up the eighth one. Selling price per unit being 150, variable cost per unit being 90, automatically contribution is 60. We have completed the per unit column. Fixed cost is 6 lakhs. Put that value in total, as well as that will be applicable for the BEP also 6,000, 6 lakhs. Okay, 6 lakhs. What will be the selling price per unit if the break-even point is 8,000 units? Now come on, first you finish up this one. Total column. What about the BEP? What about the BEP? At BEP level, your profit is 0. Profit plus fixed cost is the contribution. 6 lakhs will be the contribution for the BEP. 60 is equal to 6 lakhs, means 90 should be 9 lakhs. And this will be 15 lakhs. This will be always 15 lakhs. If I divide that 15 lakhs by 150, what is the number of units to sell to break even? 10,000 units. 10,000 units. Is that clear? BEP being 10,000 units. Now, what is the main question here? Number one, what will be the selling price per unit if the break-even point is 8,000 units? Currently, by selling 10,000 units only, you can do break-even. But now the question is, you have to sell by attain the BEP by selling 8,000 units itself. Then what you have to do? You have to raise the selling price. Raise the selling price. Let's see, I am going to calculate this one. This column is going to be used here. Your profit and loss being 0 at BEP, then your contribution is 6 lakhs. What about the variable costs are here? Variable cost, total variable cost is equal to variable cost per unit into number of units. Here variable cost per unit is 90. Number of units to be sold to attain the break-even point in reversed case being 8,000. 90 into 8,000, what is the value? 7 lakhs, 20,000 rupees. What about the value here? Seven lakhs, 20,000. Then what about the sales? 6 lakhs plus 720? 13 lakhs, 20,000. 13 lakhs, 20,000 rupees is the sales in rupees. How many units are there? 8,000. So, 8,000 units are sold for 13 lakhs, 20,000 rupees, and sales per unit being how much? 165. If you fix the sale price being 165, by selling 8,000 units itself, we can attain the BEP. So the price increased from 150 current price to 165. By fixing the sale price being 150, you have to sell 10,000 units to break even point. Rather than that, if you are fixing the price by 165, by increasing by 15, you are able to reach the break even point by 8,000 units itself. Is that okay? You can cross verify that also. Okay, 8,000 into 165 rupees, this one. This is at the rate of 165. And variable cost remains same, whether the price changes or not. Variable cost remains same. I purchase it at 90 and sell the same commodity at 150 earlier. Now purchased at 90, selling at rupees 165. 165. The last question, compute the sales required to earn a profit of rupees 2,20,000 rupees. Compute the sales required to earn a profit on 2,20,000. To earn 2,20,000 rupees, you need to maintain the fixed cost expenses properly. That should also be met. Fixed cost and profit put together, you have to earn 8,20,000 rupees. Okay. What about the sales required? It's not the revised price. You have to keep the same original price. Whenever there is a revision, this one will be applicable for the point number one. For the point number two, again original data will be taken. Original data will be taken. As per the original data, if the sales is 120, 150, variable cost is 90 and contribution is 60. This 8 lakhs 20,000 being 60 share means what about the 90 share? 12 lakhs 30,000 and your total sales should be 20 lakhs 50,000. Is that clear? Hope now you'll be able to understand. Do a small revision of these topics, these illustrations before you come the next class. Next class will go with the comprehensive illustration number 9. Then we'll move on with the formula based calculations. I'll guide you how to arrive the formula and I just teach you the application of the formula also. Okay.